Welcome to Introduction to Scope 1, 2, and 3 GHG Accounting, hosted by Work on Climate in partnership with OnePointFive Academy. My name's Angela. I'm a volunteer at Work on Climate. I'm joined by Priyanka, who will be available for general support throughout this event. For those of you who are not yet part of our community, Work on Climate is a nonprofit organization and the world's largest, most active climate community. We're on a mission to make climate work mainstream and provide various programs and events like these to help our community members along on their climate journey. If you're not yet part of our community, I encourage you to check out our website, workonclimate.org. Just a quick housekeeping note, you may have noted that we're recording the session and it will be made available after the event on our YouTube channel. Now it's with great pleasure to introduce our speakers for today, Neil Yeoh, founder and CEO of OnePointFive Academy, and Julia Akker, Associate Director of OnePointFive Academy. Thank you.
Great. Well, thank you so much. We have a lot to go through. And just as a caveat, Scope 1, 2, 3 in 1 hour is not the easiest, but we're going to do the best job to make sure that you at least feel more confident with how Scope 1, 2, and 3 are done. And, we have a lot of time that we can go through from a bi-monthly series. So you had an introduction to Julia, who's our Associate Director here. She loves cooking, weight training, contemporary art. And you also have myself, who's the founder and CEO. I work very closely also with Eugene to make this partnership work. And I love to see people's gifts used to their fullest potential for the greatest good. And that includes being able to teach you all here today. So as a context, we are running this bi-monthly series, meaning every other month, really to double down on actual skill set training. We know that education itself and awareness is not enough in the climate field. So we really hope that by joining us, you'll get the introductory components of what we would run otherwise in our academy to be able to get started. And maybe that will be enough for you to navigate your own learning, or maybe you want to go deeper and we have options for all of the above. But we really want to make this information and training really accessible to everyone. So how are we structuring it? Well, we have this 5-step approach to help people get from net zero and beyond from start to finish, from wherever they are in the maturity curve. And this is just our way to be able to just structure what is the confluence and confusion in the net zero space about where do I start? How do I end? And so this is actually from work we do as practitioners. And I think that's key. We are the people doing the work who are also teaching you. So in some senses, it's like we're able to translate what is actually real and what's applicable. So today we're actually taking from our second module, which Julia normally teaches, which is around Scope 1, 2, and 3. This is normally a 2-hour full course. And so we're only able to sort of cover the first components, but they should give you enough horsepower to really understand it and grapple with. And we'll also provide the takeaway slides at the end. But we do have some other components that we'd normally go through. So where does this all come from? Well, just as a sense, if you are interested to go deeper today, we have a OnePointFive Academy literally starting in 2.5, 3 weeks time. We have a limited time discount specifically for Work on Climate folk because you're going through the introductory content. It's in itself valuable that you already have the foundations and can go forward. We have employee permission letters to funding support letters and needs-based scholarships. So don't let that stop you from applying. It's literally around the corner. So if this is something, bookmark it. It only takes like 10 minutes to apply and would suggest you go at it. So let's start off. I would love for you all to join the Slido. So if you go to either slido.com and tap in that number, Denise will also give it to you here on the chat, so you can just click it. We're going to run through at least 2 or 3 interactive exercises throughout this. So we'll just give you 1 second to either click to Slido or the Slido link through the chat. Right. So why don't we launch the first poll? So how familiar are you with GHG accounting? So feel free to tap in there. Okay, we can see a lot of folk clicking through. Oh, okay. There's some familiarity here. Completely new has dropped down. No one that can teach the course. Maybe that one's the one where we need to reach out to you to get you onto our academy. All righty. Well, it looks like we're coming to consensus. We have people mainly that are either have some familiarity or completely new. Well, that's great. And for those that still have some good knowledge and gaps, we hope that we're able to fill them too today, but that is perfect. So why don't we continue to go through? So why do organizations first and foremost conduct GHG accounting? Well, the main thing is that we can only reduce what we can quantify. And GHG accounting is kind of like financial accounting, but as mature as financial accounting was in the 1930s. So the concept is that we can quantify the impact of an organizational business activities, whilst the financial accounting quantifies it's like a similar kind of remit to how you quantify for the climate impact side of things. And so I know that accounting trends get a bad rap, but hopefully we really bring to light the potential and also the limitations of doing this, but it's important. Well, don't need to tell you, but majority of greenhouse gas emissions come from multiple different sources. So it's not as simple as just carbon dioxide that we're exhausting or from fossil fuels. It comes from permafrost, air transportation, even fertilization, landfills. So it's not just carbon dioxide, it's all the greenhouse gases, including methane. A lot of the times when GHG accounting is done, it's done on a CO2 equivalent, meaning that you're rolling all the GHG accounting into like one type of equivalency, but it shouldn't be confused that CO2 is not the only contributor to greenhouse gas. And what we hope with GHG accounting is that the better a company measures its emissions, the more effectively it can actually reduce them, right? You can't reduce what you can't measure. And this is why this work is super important. It is the core premise of enterprise level emissions. And unless organizations are doing this, or folk like yourself really understand and can grapple with the theory and practice, you're able to call out the greenwashing that either occurs in industry or people not doing this properly. Because without doing this, we don't know whether we're actually creating more damage with the solutions that we're building, or we're actually contributing to climate impact over the long run. And so the whole point is that GHG accounting and its disclosure really drives transparency, and that's key. You know, we're able to do comparisons amongst organizations because we're using similar methodologies. And the whole concept is we can get everyone to scope 1, 2, and 3, and all the parts that are material within scope 3, and that's still a question up in the air. We are able to hold organizations more accountable, be able to audit their greenhouse gas accounting statements, hopefully in the near future, to then lead to proper outcomes on tackling the climate crisis from a measurement standpoint. But GHG, good practice for GHG accounting will not completely address the flaws. And take an example like IKEA, you know, they're doing fantastic work in sustainability, so it's not a call out to them, but GHG accounting can be limited because it doesn't necessarily incentivize big changes in business models. And so we're seeing this evolution right now to say, well, is this really just allowing a better business as usual, or is it going to create systemic change? But we know through regulations and newer compliance that will be solved for, so we just need to get started. So where do we get started? I'm going to pass it on to Julia, who's going to cover GHG protocol and how this is all done. So Julia, go ahead.
Thank you. So the GHG protocol, this is considered the Bible in GHG accounting. So the original standard was actually released in 2004, which is 20 years ago. It's been a long time, and it provides the accounting framework for virtually every corporate GHG reporting program in the world. And since 2004, more and more standards have been released, essentially as add-ons or providing additional context or detail to the original one. And as we speak, there's actually a major update that's happening to the GHG protocol that began sometime in 2022. And since then, there have been various comment periods and feedback surveys that have been received from participants and corporates, NGOs, you name it. And so as of right now, they are updating the standards. We expect to receive the final guidance in 2025, fingers crossed, but it just goes to show you that this is an ever evolving space. Now, the standards themselves, they can be very, very dense. However, if you yourself are actually tasked with completing GHG accounting, then I really strongly encourage you to actually sit down and read the standards, because they likely have all of those questions that you would otherwise be Googling. And so it is honestly a prerequisite to doing this work. And so how did the GHG protocol actually come to be? So it was developed through a partnership between WRI and WCSD. And discussions began in 1997. So that was 27 years ago. And if you are following, that took them 7 years from when the discussion started to actually having the GHG protocol published. And so fast forward to now, around 92% of Fortune 500 companies that respond to CDP use the GHG protocol directly or indirectly. Now, you may have also heard about the ISO 14000 series of standards. These are a set of internationally recognized standards that are used for environmental measurement. And there's actually a specific one that is for enterprise level emissions. It's ISO 14064. And the reason why we don't necessarily cover it here is that it is actually very, very, very similar to the GHG protocol. One of the main differences is that it is paid. And so since the GHG protocol is free, that is the one that we choose to share with you because anybody can access it. Next slide, please. And so as we know, and as Neil mentioned earlier, emissions come from a variety of different sources. And so in order to be able to account for them in a structured and a standardized way, the GHG protocol coined the scope 1, 2, and 3 terminology. And the goal of this is to really be able to accurately measure, manage emissions, and to be able to benchmark against other companies or other industries. Essentially, you're using the same language. So if we break this down, Scope 1 emissions, these are the direct emissions from burning fossil fuels in your facilities or vehicles. Essentially, an organization directly owns or controls these facilities and vehicles. So if you have a building and there's smoke coming out of the smokestack, or you use a truck for your company's deliveries and a combust fuel, those are direct emissions associated with your particular company. Moving on to Scope 2. So these are technically indirect emissions, and these are associated with electricity, heat, or steam that your company purchases. So typically, if you, let's say, work in an office, you're not generating the electricity on site. You're purchasing the electricity from a grid. But the emissions associated with that are very specifically within Scope 2. Then everything else falls into Scope 3. Scope 3 is a massive bucket. It essentially covers all indirect emissions from your value chain upstream and downstream of your operations. So this can include anything like business travel, employee commuting to the office, disposing of your products, purchasing products from your suppliers. And as you move from Scope 1 on the left-hand side of the slide to Scope 3 on the right-hand side, the emissions tend to be more and more difficult to calculate because you then become further and further removed from the company itself. Therefore, less access to data, you have less control or influence to actually be able to change or reduce those emissions. And while right here we're showing these scopes linearly just to introduce them this way, you really need to think about it from a systems view, and that this is not a linear model, but really continuous. So we'll cover that on the next slide, please. So this is a graphic. You have likely, or most likely, seen some version of this before. It is from the GHG protocol, and most GHG accounting softwares have a version of this on their websites, but essentially it illustrates all the various activities that are included within the definitions of Scope 1, 2, and 3, and where they may fall along a company's value chain. So value chain, these are activities that are upstream and downstream of your company. When we talk about upstream, so this is the beginning of the value chain. Think about your suppliers, your distributors, manufacturers, and the activities that would fall within this category are production, sourcing, and procurement of your raw materials or your ingredients or the inputs that you need to be able to produce your product or service. Then you have your company, so your operations, you're intaking those raw materials, those products to make your product or service, and you're doing your operations. Then after your company, that's downstream. So that's the end of the value chain. You'll pass on your product or service to retailers or wholesalers or other intermediaries to be able to get to the customer. So the activities that fall here include distribution, marketing, sales of your product or service. So if we put it all together, emissions are generated upstream and downstream of your company's own operations. And according to the GHG protocol, a company has to account for each and every one of these emissions. So the emissions from your operations, as a reminder, these can be your Scope 1 emissions. They're your direct emissions, but they were someone else's Scope 3 emissions. So if we take an example, let's say that you produce paper, right? And you have various customers that buy your paper. So your paper production emissions are your Scope 1, but then you're a supplier of your customer. And so they have to account for your emissions in their Scope 3. essentially what I'm trying to get at is that this value chain, it's not static, it's continuous. Activities are interdependent upon each other, and anything that happens upstream has an impact on the downstream and vice versa. And since supply chains most often are global or can be global, sometimes companies have thousands of suppliers. You can imagine that actually measuring Scope 3 emissions tends to be extremely complex and time-consuming. And to make things even more complicated, as Neil introduced, that the GHG protocol requires you to not only measure carbon dioxide, but other greenhouse gases as well, which you can see at the top of the slide here. And so one thing that we should clarify is that whenever you hear about a company's emissions or what they report on, you almost always hear about it in terms of carbon dioxide equivalents. And this is really so that we're all reporting, again, using the same language. And so if you start out with methane emissions, eventually you'll need to convert them into what's called carbon dioxide equivalents. And so this is essentially the equivalent quantity of CO2 that would be needed to have the same greenhouse gas effect of that particular gas. And we'll get into this in a little bit when we actually talk about the calculation. So just to check your knowledge and see who has been paying attention, we have a little quiz here, and I hope this will show up. But essentially, we are asking for you to choose the correct definition of Scope 3 emissions. Oh, this is interesting. Oh, we have to start the quiz, I think. Okay, wait, let me see. I haven't used this type of question before. Okay, that should have started. Maybe next one. I can see people. Oh, yeah, there we go. Okay, I see some responses coming through. We'll share them as they're ready. Okay, it looks like as I'm seeing them coming through, 80% of you, I think, are getting it correct. Maybe go to next slide, Neil. That should have, yep, there we go. So the 82% of you that have selected the second choice, you are correct. These are Scope 3 emissions are indirect emissions occurring upstream or downstream in your company's value chain. For those of you that selected the bottom response, so this is a trick. Indirect emissions that are outside a company's value chain, you do not have to account for these. These are not included in your footprint. All right, moving on. Oops, sorry, my computer just fell. Okay, so after you complete your data collection, after you complete your calculations, what do you actually get as a result? The result is called a GHG inventory. You may have heard this term before. What it is very simple. It is just a list of your company's emission sources. So if we look at the slide here, you'll see the list of the emission sources on the left, and then the associated emissions quantities on the right. And what a GHG inventory does is that it helps you organize large amounts of data into a very simple overview that has the different types of emissions tracked over a reporting period, which is always 1 year. So whenever you calculate and report on your GHG emissions, it is always over a single year timeframe. And generally, the GHG inventory will follow some sort of common standard and protocol, such as the GHG protocol. Next slide. And ultimately, you can use a GHG inventory to be able to report internally to your employees, as well as externally to customers, investors, regulators. And almost more importantly, after doing this exercise, you'll really be able to direct action to reduce your emissions to areas where you have hotspots. So after doing this exercise, maybe you realize that your business travel contributes to 33% of your total emissions, which is sizable. So that is now an area that the company can target to reduce its emissions. And the inventory that showed you on the last slide, it was actually from Microsoft's 2021 Environmental Sustainability Report. And the graphic on this slide here is the same, those same emissions now broken down visually. And so you can see that almost 98% of Microsoft's emissions are Scope 3 emissions. And if you've been following, then you know that one, those are very challenging to calculate and might be challenging for Microsoft to be able to reduce, because it would require them to have to talk to their suppliers and or their customers and identify ways that they can reduce emissions. Next slide. And so to recap, understanding the difference between Scope 1, Scope 2, Scope 3 is really crucial to GHG accounting. One, it'll make sure that you're actually reporting and accounting according to the GHG protocol, but you also want to make sure that you avoid double counting and that you're categorizing things properly into each scope. So as a recap, Scope 1 emissions are ones that are directly related to the operations of the company. They're within direct control of the company, and they occur at facilities that the company either directly owns or leases. They control those facilities or vehicles. Then Scope 2, these are related to the purchase of electricity, steam, heating, or cooling at those same facilities. And then the last bucket is any other emissions that occur upstream or downstream of your operations that can be from suppliers or customers. So that is a little briefer on what are Scope 1, 2, and 3 emissions. So now we'll move on to how to actually calculate them. And as a reminder, this is a very short intro. There is more depth behind this, and we can't cover it all today, but hopefully this will give you a good sense of it. So at the end of the day, this is really actually simple math. Of course, there's a lot of data that needs to go into it, but the actual calculations itself are not complex. So here is the end-to-end GHG calculation process. Now, don't worry about taking notes. You'll be able to see these slides afterward. But we've tried to break it down into 5 major steps with activities under each one. So first, you identify your sources. This includes setting your inventory boundaries, identifying all the possible emission sources, categorizing them into scopes, and you also want to determine what are likely to be the most material and relevant sources for an organization to be able to help focus their data collection, knowing you cannot boil the ocean and try to collect every single data point from thousands of suppliers, within a few months. Then you'll actually move on to collecting your data. So you'll determine the type and level of data that's available. You'll identify what inputs you need for the calculation, and you'll assign ownership across your organization for people to go ahead and collect that data. Then you want to obtain emissions factors. These are essentially multipliers that are used that once you have your data, you multiply it by these factors, and then you get your total emissions after that. You proceed with the calculation process, you document your methodologies, any assumptions, limitations used, and then you summarize your outputs in a GHG inventory table like the one that we showed you before. And then last but not least, you'll want to report, depending on what your requirements are, any requests you've gotten from your investors, customers, etc. You will report in some way, shape, or form, and then track your emissions from there on out. So that is the general process. Let's break it down. So first step of the process is to set boundaries. And there are 3 types of boundaries here. They are temporal, organizational, and operational. What these do is that they determine which activities and operations should be included within your emissions calculation. You're literally setting boundaries. Anything that would fall outside of these boundaries would not be included in your calculation. And it's really important to do this because you will use those same boundaries year after year to make sure that you're comparing apples to apples. So if we break it down, if we look at the graphic on the right, we'll start at the top and then work our way down in terms of order of operations. So the first thing you do is you set your temporal boundary. This is time. As I mentioned earlier, when you calculate emissions, it's always over a single year. So maybe it's your calendar year, January through December. Maybe it's the company's fiscal year, let's say July through June, depending on what makes the most sense for the company. Then you set your organizational boundaries. This is figuring out which parts of the organization should be included in your inventory. So for example, if you're a company like OnePointFive, we are just ourselves, we have no subsidiaries, nothing like that. This is a very simple step for us. But let's say you're a Walmart and you have, I don't know how many, but let's say you have like 20 subsidiaries, then you have to figure out which one of those are going to be included in Walmart corporate's GHG footprint versus maybe some of them want to calculate their own footprint and they'll do it separately. So they have to go through this process and figure that out. And then the last thing, they're called operational boundaries, but this is essentially identifying what are your scope 1, 2, and 3 emissions? What are the activities that should be included and categorized in each of these scopes? Okay, that was the first step. Now, the actual process of identifying your scope 1, 2, and 3 emissions. So ideally, you do this at the very beginning of the process, and then you move on. But what really typically happens is sometimes it's more iterative, where you start out, you think you have a good sense of where your emission sources are, and then down the line, a surprise comes. You're like, oh, wait, we need to account for this. So just expect that that is likely to happen. But ideally, you're aware of all potential emission sources, and then you categorize them appropriately. So scope 1 emissions, these are your direct emissions. These can include stationary combustion, so literally combustion from stationary equipment like boilers or furnaces. You have mobile combustion, so this is if you have any vehicles, if you're combusting fuel in cars or trucks, trains, planes, ships, that is considered mobile combustion. Then you have fugitive emissions. So these are things where there might be a leak, for example, from a refrigerator or an air conditioner. These are unintentional releases of greenhouse gases, so they're called fugitive emissions. And then last but not least, we have process emissions. So these are very specific. They are typically not applicable for most companies, but they usually occur during chemical manufacturing processes. That is scope 1. Moving on to scope 2. So these again are indirect emissions from purchased electricity, heat, or steam to be used at your facilities. So there's actually two methods for reporting scope 2 emissions. And if both are applicable, then you have to report on both. And let me walk you through them. So on the left-hand side, we have the location-based method. So this is essentially calculated using the average emissions intensity of your local grid. So OnePointFive, we have an office in Midtown Manhattan in New York. And so this area has a certain electricity grid, and there is an emissions intensity associated with this grid. So when you calculate your electricity, we would find the kilowatt hours of electricity that we consume for our office space, and then we would multiply it by a certain emissions factor that's associated with New York City, for example. There's also a market-based method. So this is very specific. If, let's say, our building has called up our utility provider and specifically requested that we source renewable energy, or that we increase the amount of renewable energy that's in our sourcing of electricity that's different from the average grid mix, then that is a good thing, number one, but we should also be able to account for that difference. And so that is calculating emissions using the market-based method. This also is applicable if a company, for example, purchases renewable energy certificates or anything similar, then they can account for those in this method. So some companies do not have any choice in their electricity provider, and they're not able to call them up and ask to source a higher proportion of renewable energy, in which case they would only need to report on the location-based method. One thing that tends to be a little confusing that I should clarify is that scope 2 does not include heating from natural gas that you purchase. If the combustion occurs on site, those on-site emissions are scope 1 emissions. If the heating is combusted elsewhere and you purchase that heating, then that is not considered scope 1 emissions. That one is a tricky one. We can come back to if anyone has questions afterward. Okay, moving on to scope 3. So this is the big beast. So there's actually 15 different categories within scope 3 itself. Now, not every category is relevant to every organization. And so what we really recommend and what we typically do with our customers is that at the beginning of the project, based on your industry and what your business model is, where you're located, you're likely able to identify what the most material categories are. And you should focus your data collection efforts on those material categories, because like I said, you don't have unlimited resources or time or money to spend on this exercise, and it may not be worth your time to work really hard and spend a lot of money to calculate emissions that end up being 0.1% of your total. Rather, you should really focus your efforts on trying to accurately calculate the areas that are likely to be the biggest proportion of your total. So for example, at 1PointFive, we have an office. We don't produce any products. We consult and we teach our OPF Academy. We do have some business travel. So as a services-based company, we are unlikely to have upstream and downstream transportation impacts. We are likely to have business travel impacts. We do purchase some, office supplies. We have laptops. So we do purchase things to be able to do the work that we do. So purchase goods and services, that very first one, is likely to be material for us. So you would go through each one of these categories and think about the particular company, the industry that it's in, and determine, is this likely to be material for us, yes or no? And that way you can focus your efforts. Moving on. So let's say you've gone through the process, you've identified where you're likely to have scope 1, 2, and 3 emissions. Now you need to actually collect your data. So in order to do so, you have to determine what are the inputs that you need for each calculation. And the GHG protocol, for every single category of emissions, it spells out what exactly you would need. And there's 3 different types of data that you can collect. So first we have direct measurement, then activity-based data, and spend-based data. So direct measurement, this involves actually on-site measuring the composition and volume of gases using direct monitoring or sampling techniques. So imagine there might be a monitor attached next to a power plant, and let's say it's able to actually detect the gases that are being emitted right then and there. So that is the most accurate way of collecting emissions data. The difficulty here is that you imagine, one, it's expensive. You would have to have these types of monitoring or sampling techniques at every single area where emissions are occurring. And it might not be applicable for all types of emissions. For example, if I'm taking a plane for a business trip, then I might not be able to directly calculate the emissions that are occurring. So you can't use this for all types of sources, but it is very accurate for where you can use it. The next level down is activity-based data. So these are physical units from an activity that generates GHG emissions. So for example, if we take that example of me taking a flight on a business trip, then if I'm able to get the miles traveled by the airplane, or even better, the gallons of fuel used by the airplane, then I can multiply this by an emissions factor in order to estimate the total emissions associated with that activity. Again, an emissions factor, it's essentially a multiplier. You can find it in various databases online. It's determined through various factors, but it is used to estimate the emissions pertaining to a certain activity, pertaining to a certain, gallon of fuel or miles traveled by an airplane. Then the third category, spend-based data. This is the least accurate, but it's typically the easiest to collect, and oftentimes what companies start with when they're first starting their journey before they really know what data they need to be collecting. So this is the dollar amount, or whatever currency is applicable for a given country. It is the amount that is spent on various activities that generate GHG emissions, which are then multiplied by an emissions factor to be able to estimate the emissions. So as an example, we buy laptops to be used by employees at our company. The laptops do have emissions associated with them. They go through a manufacturing process. There are likely emissions that occur during that process, and we just buy these laptops, let's say from Best Buy. So I could try to figure out, call up the supplier, ask them if they've done a life cycle assessment and what are the emissions associated with manufacturing this laptop. But let's say I don't have time to do that. What I can do instead is, if I spent $1,000 in the laptop and then I find an emissions factor that's associated with computer equipment, I can use that to estimate the emissions associated with this laptop purchase. So these are the 3 different types of data. As a reminder, the first one is the most accurate, but also I would say the most difficult and time-consuming to collect. And then as you work your way down, it becomes easier, but also less accurate. So oftentimes you have a mix of different types of data, depending on if you have a material emission source, maybe you would really try to collect more accurate data for that emission source. Or if you don't have much time, then you really try to use spend-based data maybe for your first year of calculation and aim to improve and get activity-based data the following year. Next slide. So now that we've had our data, so let's say we've identified our emission sources, we've collected our data, now we need to apply emissions factors. So I mentioned these in the last slide. What an emission factor is, it is essentially, it lets you convert activities into GHG emissions data. And so it's determined by taking an amount of a pollutant. So let's say you have 10 kilograms of carbon dioxide, and you divide it by the activity that caused those 10 kilograms of carbon dioxide. So let's say a truck is driving and it uses 1 gallon of diesel fuel, and that results in 10 kilograms of carbon dioxide being emitted. So that relationship is the emissions factor. So 10 kilograms of CO2 per gallon of diesel fuel. And these emission factors allow us to take an organization's business activities and then transform them into GHG emissions. And this could be various kinds of activities. So gallons of fuel combusted, tons of waste sent to landfill, kilowatt hours of electricity consumed. These are all examples of like activities. And emissions factors are not only used for carbon dioxide, but you can also find emissions factors for methane and nitrous oxide and other greenhouse gases. So you have your data, you find an emissions factor. Typically, like I mentioned, they're available in various databases online. Some are free, some are paid. Let's say you found your emissions factors. Next slide. Now you have to convert them to carbon dioxide equivalents. So in the beginning of the lesson, I mentioned that ultimately what you end up reporting in your sustainability report or to regulators is oftentimes in carbon dioxide equivalents. So all of the individual greenhouse gases need to be converted into carbon dioxide equivalents. And these are usually expressed as million metric tons of carbon dioxide equivalents. And if you found an emission factor that is not already expressed in this way, you'll need to convert it using an index called global warming potential. And global warming potential, I think Neil mentioned it earlier, but carbon dioxide here has a value of 1. Methane, as you can see, has a value of 21 to 28. The reason why these varies because they are measured in various IPCC assessment reports and other sources, and there does tend to be a range. But let's say for methane, we take the 21 value. What this means is that 1 kilogram of methane causes 21 times more warming over a 100-year period compared to 1 kilogram of carbon dioxide. So methane's global warming potential then, let's say, is 21. So you have to consider these when you convert to carbon dioxide equivalents. Next slide. And so the final step here to actually calculate your emissions, it's a very simple formula. If you found a credible emissions factor that you have converted to carbon dioxide equivalents, and you have your activity data or your spend-based data that you collected, you multiply them and you have emissions for a given activity. Now you just need to repeat this process for every single activity that is included within your boundary, and then you sum them up. And that gives you your total carbon footprint or GHG accounting footprint. You can do this manually in a spreadsheet, but oftentimes you can use GHG accounting software, which Neil will touch on later, to really speed up this process. Next slide. And the result, which I showed you earlier, is this GHG inventory table. So you've calculated your emissions for scope 1, scope 2, scope 3. You've measured them and converted them to carbon dioxide equivalents. And what you get is essentially like a balance sheet where you can see your total emissions by category, and then you're able to compare them year over year. And that is it. That is a very, very fast intro to how you do GHG accounting. Of course, there's complexity behind it, but ultimately, like I said, it is a fairly simple calculation. And I'll pass it back to Neil now.
Yeah, so I know that was a lot and we've still got a fair bit to go, so stay tuned. But how do we actually put this into practice? Like, what is the actual real examples look like? What are the tools? I'm going to go through that right now. So here's an example of a real client that we worked on in the consumer space. They actually asked us to look at their scope 1, 2, 3 emissions to figure out where their hotspots lie. And as you can see here, obviously it's a fictitious number, but the proportions are actually right. For this consumer product company that had 7 different rug type products, we actually found that the majority of emissions were in scope 3, as you can sort of see there, but the majority, even more than half of their enterprise emissions were at the purchase goods and services level. And so within that, we were able to help reduce their emissions from domestic suppliers by minimizing air freight and moving to ship freighting, which was a huge benefit for them, and able to actually measure that emissions reduction. We're able to influence customer behaviors of drying their products to reduce the impact itself, because it was a washable carpet product. And then finally, we're actually able to focus on suppliers' energy usage, realizing that energy was a huge impact and focusing more on renewables. So this is real work that is applied in a real world setting. But what is actually helping us get there? Well, there are a ton of tools out there that are available, and also a huge number of software providers. And so if you are interested to get started, you should definitely check out the GHG protocol. The EPA has a free tool here on the US side. We actually have a partnership with Change Climate Project that we actually use their B tool to use a platform to actually train people how to do scope 1, 2, 3 for clients on behalf of clients. And there are this rise of software providers. So you're thinking, well, me as a professional, are these software providers just going to basically replace us? The quick answer is no. Like, the best thing that we can do, if you've seen the process that Julia just covered, it's a data problem, not a software problem that we're struggling for right now. And the standards are still getting developed. So the best that these software providers can do are probably going to service really large companies that are super sophisticated, have many, many suppliers, many facilities, and need something a bit more sophisticated. But honestly, for the 99% of companies out there, they're probably looking for people like yourselves, whether you're working in-house as a consultant or as a data analyst, to be able to either utilize the emission factors that are available out there, and even just using Excel or the free tools that are available to create these. We won't see, I think, software providers go further until we're much more established, probably like 5 or 10 years down the track. But a key example is, if you know QuickBooks didn't replace accountants. I don't think that software will ever replace the more complex elements of GHG accounting, which we know that there are a lot of. So we just know that people always ask us that question. And then we've done some analysis that we'll send in the appendix slides about some of these platforms, what they can do and what they can't do. But we're super passionate to try to do things smart. And there are tools that enable you to do this work much better. And why does that all matter? Well, regulation is rising. There is a sea of regulation coming in that we've already seen even in Q1, that a lot of companies, a lot of suppliers, even down to the scope 3 level for larger companies, are wanting to act like today. There's a huge amount of work that is just starting to pump out, even in the California regulations. The EU is already ahead, and as more and more countries take this on, everyone's going to have to do scope 1, 2, 3. And in some senses, everyone that's interested in this field, even at any part of climate, should be learning the basics of GHG accounting, and that's what we're here for. So that was a lot, but what does that mean for us? I've seen in the chat that there's a lot of existing sustainability professionals as well as aspiring sustainability professionals. This is all relevant for you. Like, literally, sustainability managers have been the top hires out of any climate job, even in clean energy. It's a huge demand. But there's literally a problem in the market across the board, and this even includes the VPs of sustainability at large companies, that there is a growing skill gap. These are called green skills. GHG accounting, I would call as a technical green skill that needs to be learned. The number of jobs requesting this is outpacing the amount of talent that we have by 2x. This is from a green skills report from LinkedIn, by the way. So this is LinkedIn job data. It also found that green hiring has been resilient despite other, tech, finance, sort of dropping jobs. Our green space has actually been growing. And overall, we found that in LinkedIn hiring data, that if you have one of these green skills, even from this 1 hour content, I hope that this is part of it, you actually become much more resilient and higher chances of getting hired or moving up in your role. And that's why it's important. And we went through all the jobs that are out there when it comes to corporate sustainability. And these are the things sought out by employers, right? GHG accounting, LCA modeling, certification, reporting, calculations. Like, we'll be going through this like very slowly in an introductory period every other month. But these are skill sets that you can't really get anywhere else unless shouldn't be secret sources given out there. And this is just one touting frustration of the sustainability consulting world, is that people are making secret source what shouldn't be secret source, which is the basic knowledge of this stuff. and they're just trying to upsell people. We believe that we want to rise the C-level and make everyone understand these skills so that people and services, which are important, are actually doing the hard stuff, the real stuff that we need to do. And our field does not yet have a CFA or CPA or sustainability. We're trying to build that because it should be treated that way. It is literally a trade that can be greenwashing or misinterpreted if you don't understand. So the huge problem in our field is that organizations are hiring from the same talent pool. Universities are too academic. I did my master's in environmental management at Yale, and I learned maybe 5% of what I do today. And so that's really not covering it. And the online content is just overwhelming. You kind of need a guide sometimes. And so a lot of sustainability professionals are either excluded from industry or are limited in their progression because they're not understanding all the bits of the puzzle. And that's what we're here for. And so we've built our own community of Academy graduates. It's teetering on 356, and it's going to be over 500 soon. We have 35 countries represented, and our core remit is to help you feel more confident, to be able to shift from, I don't really know this, or I kind of know this, to I'm actually able to advise or work on this within my current organization. That's key. You do not need to quit your job to make this applicable to help drive your organization's net zero. We literally had a team from Automatic who own WordPress, who brought in 5 of their staff telling HR to come, and they learned the stuff, and then they're software engineers, and now they're championing and lobbying net zero within their organization. And also, we just want it to be a networking space. So imagine the trained professional community that you're looking for that will continue to support you in continued learning and networking and whatnot. And that kind of leans into like how we see the future of workforce training. And I really hope that you resonate with this, is that it's a combination, right? Curriculum, what we just taught you is only going to get you probably 20% of the way there. You need to put it into practice. So we have practical labs through our academy where you actually build a scope 1, 2, 3 model. You actually build one. And when you're in an interview or you're trying to get promoted in a role, when people say, what familiarity do you have? You can literally show your work. That's where 80% of the learning is done. And unfortunately, our education system hasn't really caught up with that. And on Friday, we bring in the expert industry speakers. Like last time, we brought in the GHG protocol scope 3 standard developer to then help to then frame, okay, what's coming? What do I need to care about? And then to be able to network as a community group. Right. And so this is like an example where we would give you a case and say, hey, this is a fictitious company, actually one that we know. And these are the data points that we have from a GHG accounting inventory. Now go away either in groups or individually, build the emissions scope 1, 2, 3 model, and then let's discuss about it one by one. What is actually applicable in industry? What have we seen? And so we're really excited by this because we can then bring in our speakers from industry. These are clients that we've worked with. These are leading standards providers. In fact, we have Seth Godin. It's not been announced. We're able to announce it, but Seth is actually going to be speaking on May 2nd, and we're going to actually make this available, hopefully, for wider audiences. But we have even the ISO net zero standard providers coming in. We've had the co-founder of Patagonia. It just opens up a whole range to get the industry to support one another in collective wisdom. And so out of the 350 graduates, it's classic, like the same survey that we did for you right at the beginning was that majority of people kind of know this stuff, but not really confident to advise. By the time they've completed the 12 hours of what we have, and you've seen just a snippet of it, they increase their confidence to advise. And that in itself is undeniably what we're trying to move the whole industry to, and why we're so passionate to partner with Work on Climate, because it's not just about knowledge, it's about skill sets to act in the real world. And so we've seen this, and our community is growing like significantly. It's not just people getting jobs, but we actually have people from industry. We have VPs of sustainability at large Fortune 500s who are actually in our community. So this is a proper professional body, and people that have been able to attain work. And it's not just sustainability consultants, right? One example is Sinai. We've got a partnership with them, their GHG accounting. Their sales team came in and learned GHG accounting because they need to understand the end-to-end net zero to be able to sell and scale the climate technology that they have, all the way to government, all the way to nonprofit. And it's just so important that we're here to support one another. And so the concept is, by being graduate, we can get verified credentials, and we're trying to move up to become the CFA of sustainability professionals, that this becomes a tag and thing that people say, I have done this, and therefore I'm verified and credible in the market, because we do not yet have that. We want people to have the latest content, which is why we're sharing it all. And the latest content is key because this changes every 3 months. So we're updating this content every 3 months because the standards are shifting and changing. That, you get invitations to all the speakers, the communities, the meetups, but we're really kind of like the practical industry folk who are actually trying to do the work and support others. And this is part of our mission to train and activate 100,000 sustainability professionals for 2030, knowing that we need to fill that talent gap. And so with that, we just wanted to thank you. If you've tuned in for all the way through, we are providing this limited discount for just Work on Climate folk that have done this event. Literally, we have a cap off in 4 days. It only takes 10 minutes to apply. If this is even interesting to you, I would 100% put your hat in. We have employee permission letters all the way to needs-based scholarships, so nothing should be stopping you from giving it a go if you wanted to commit to this. And we'd be really excited to take a look. So happy to take some questions for now, and then for those that stick around, we really value your feedback at the end. So why don't we hop on? Julia, do you want to get started on any of the questions that pop up?
Yeah, I'm pulling up the Slido. Thanks everyone for submitting questions and for upvoting them. So I think the first one that was upvoted was from Grace. I'm happy to have you hop on here if you're still in the room to ask your question. And if not, I can also ask it. So Grace asked, when accounting for Scope 3 emissions, isn't there a risk of double accounting? If so, how can this be avoided? Yes, that is a huge risk, I would say, across the board for GHG accounting. And this is where setting those boundaries is extremely important. And I think in this period, ideally what we'll have is some sort of platform where everyone is submitting their emissions to their platform, and you'll be able to pull your suppliers' emissions directly without asking them separately. And your emissions will then, someone who's downstream of you would be able to pull yours. That is the ideal world. But right now we have many, many software platforms out there, and I don't think we've reached that point yet. And so what this will rely on is setting your boundaries really strictly. And so if you have a subsidiary that you are excluding from your boundary, then none of their emissions should be included in what you end up reporting. And you have to be very clear about that when you start collecting your data. If you're sharing a facility with someone, you have to determine upfront, how are you going to account for emissions from that facility? Will you do a 50-50 split based on ownership, or will you do it, based on how much production is allocated to one company versus the other? So all of these questions need to be discussed upfront in order to be able to avoid double accounting and make sure that you're not accounting for someone else's emissions. But I will say, honestly, like at this point, I think it still occurs, unfortunately, just because it's still a very nascent space. Okay. Next question. I think, Emma, you asked a question about emission factor databases if you're still in the room.
I am here. Nice to see
Hi,
you guys
Emma.
again.
Yeah.
Yeah, so my question was specifically around the emission factor databases. We're doing some work on Scope 3 accounting. And I mean, there's many out there, and I just would like your take on what are some of the better ones. I mean, there's EcoInvent, but I'm wondering if there's others as well.
Yeah, EcoInvent is a really great one. We like them because they do pull in life cycle emissions data. So I would say it's fairly comprehensive. They have a good representation across various locations, industry sectors. I would say it's also a little challenging for someone who's brand new. It requires having a good understanding of some of the technical language that even sometimes is beyond my understanding of like certain manufacturing processes. I would say it depends on the emission source. I know like UK DEFRA, for example, their emissions factors are freely available, and they're like the leading source oftentimes for like business travel emissions and like hotel nights, things like that. I know the US EPA also has its own emissions factors.
Yeah, I've seen those.
Yeah, and so like, for example, certain things are pretty standardized at this point, like the emissions associated with 1 gallon of diesel fuel from like an SUV. I think that's been like well studied and researched. There's other things that, for example, relate to recycled content or like innovative materials that are harder to find because they're more kind of nascent and new. But EcoInvent honestly is one that we use fairly often, so I would recommend that one. We do have a longer list that we've put together somewhere that we do share.
Okay, thank you,
Emma. Yeah.
I can take these ones.
Oh,
Yeah.
sure.
That's amazing. Emma's from our community, which is great. Real practitioner actually doing a project right now, so that's really great. I saw 2 questions here that I can answer. It's like, what is the qualification process for being a GHG accountant? And do you have any recommendations for landing these roles? I'll answer these both hand in hand. In terms of the qualification for GHG accounting, there is none, and that is what's really frustrating. We're actually going to be in touch with, hopefully, GHG Protocol. We're in touch with others to try to make this more solid. And the reason why I sort of mentioned this is because these standards are getting developed, like these micro-credentials are only starting to come up. We had this a year ago, but we're trying to really make it robust, as Alex said, to make this like such that you do this and you can prove your work. And that's actually where it lands on both being accredited in this space, in quotation marks, and getting the role is actually building the models. That's the kind of the key, is that unless you actually do this work and put it into practice, whether in a fictitious environment through a lab or actually on a project, you actually don't get 80% of the work. Like the reason why Julia can answer all these questions, because we've done several of these, and you start to realize some of the limitations, issues, even with databases to the scope 1, 2, 3 side. And so we're trying to provide that environment. And so when you're in an interview, and we've heard this from multiple people, we're helping work on climate here to like get them to interview folk who are looking for roles that have done our academy, for example. The one thing we've heard is that when you're in an interview, and these are the industry experts speaking, we ask them, what would it take for you to hire? It's like, prove your work. Like they just want to know, have you done this before? Have you got familiarity? And a lot of the times people haven't even entered, they're like, no, or they're in a sustainability role, but in a marketing function, they haven't done this before. They only can say no, but they can actually say yes and actually screen share and like even show the model that was built even through our academy. And we found that confidence of being able to talk about it plus being able to show your work is sometimes what's just missing out there, because people just need that. And that's the whole going back to the green skills gap, that people just don't have it. And if you can't say yes, then yeah, it's tough, right? You can only say so much if you just read the standard itself.
Cool, thanks, Neil.
All right, so for folk who've stuck around, we will definitely have this recording for you. This is for Work on Climate and us. We'd love your feedback. Again, we'd love to connect with everyone that's around, or just shoot our LinkedIn's here if you have any further questions. Got Denise here, but we're really, really passionate to ensure that every organizations have the skills, capacity, and collective wisdom to see net zero and beyond from start to end. And that's our passion. And we believe the workforce of the future is just not climate or sustainability folk, but it's everyone being able to grapple with what should be integrated into business strategy, and that know that we can all, by learning this stuff, actually drive measurable climate action. And so I really hope that even if you just got a tidbit or you got like a huge amount and you're overwhelmed, that you have kind of gone away and started to be on your progress of either gaining or upgrading your green skills, so that we can all drive to decarbonize. So we are so passionate. We hope that you come in and tune in again in a bi-monthly. Hopefully we see some of you in our next cohort. We do run these once in a while, but definitely getting on earlier than later is the best. And that way you can sort of join our community, who are all professionals trying to even support one another and sharing the latest information and opportunities that are out there. So with that, I am excited that we are on time. Thanks again for hearing us talk for all this time. I'll hand it back to the team if there's anything else to mention before we tune out.